of the exciting next bar matters. I'm going to talk about bubbles and lots of other interesting things. And I've got my partner in crime ready and waiting. Hi, Cameron. How are you doing, buddy?
I'm good. I'm good, Mike. How are you doing?
Good, good. Yes, interesting times for sure. Which will
Very, very interesting. Yeah.
Just when you think you've got your head around it, it changes again. Hey.
Yeah. It's this is well, we'll get into it, but definitely a conundrum on in the markets at the moment.
Indeed. And of course, welcome to everybody who said hi in the questions box. Good evening, Johnny. How are you, mate? Hi, Wayne. Thanks for the heads up on the AV. And Roger and Keith and Bob, you're all very welcome. As always, guys, it's your session, so chirp in with any comments or questions you have, and that would be wonderful as always. I'll get there, Wayne. I hope you're good. Right. Okay. Let's let's get into what's driving major assets now, and this is sort of what we're gonna sort of cover tonight. There's a couple of things I'll just to comment on, and then a couple of things we're going to do a little more detail on as we go through. Just we're at the back end of earnings season, but it ain't all over yet because it's been a storming earnings season. Really, we've got a growth rate that was anticipated to be 7.9% growth anticipated for the next 12 months. It's now at 13.3, I think, the last I saw it. The 82% beat EPS expectations, 76% beat revenue expectations, which is as good as it gets, really. We might touch on that as we go through, but it's one of the reasons markets have been relatively okay for the last few months. It's a couple of earnings seasons that nail it are always going to do. Hey, Cam.
Yes, sir.
We're going to talk about government reopening. Fed November cut. I want to talk a little bit about the Fed. Just mention them briefly. We're not going into. I don't think we're going into any detail about the Fed tonight, but we'll reference it along the way. What we are at. So, what was the latest percentage on the December likelihood of a cut at this stage?
I think we're 41%. So just to put that into perspective, when I was doing the conference last month in Bangkok, which was middle of the month, we were about 90%. So yeah, we've dropped off. So the last 3 weeks, we've dropped off, considerably. Meaning that even from last week, I think I looked at it, it was about 60%, and even prediction markets like Kalshi were still giving 70%. So
yeah, quite surreal.
It's a big drop.
And that's without data, of course, which we'll talk about a little bit when we talk about government reopening and that sort of thing. The China trade war. Are we in a truce at the moment?
Yeah, I read today that Trump is expecting to have this done by Thanksgiving, which is, I believe, the 27th of November for our American friends. Man. So, I mean, you know, I think they bashed it out, didn't they, at the summit in South Korea. And it all looked great. I thought that was it. I thought, look, we get the China deal done. We get the Fed rate cut, which came in November. Great. We just need the government to open and we'll be fine.
Yeah, that was
it hasn't worked out. Hasn't quite worked out like that.
Yeah, and we'll talk about the other four as we go along. Plus, of course, anything that pops up in terms of questions or any mumbling thoughts we have. Let's just kick. This is where we're at. If we take the futures markets, this is what I looked at. Possibly changed again since then. This is what I looked at sort of a little while ago. How much does that change? Not much.
No, so, it's pretty much the same.
So it's down about, if we look at the futures, down about 6.5% from the highs, down about another percent and a half from yesterday. So it's hardly a staggering drop, but it's enough now to be noticeable, I guess. It looked as though it was going to hold on to this sort of 25,200 level and then sort of drop through in the last couple of days. This next 2,400 level on the futures looks interesting. You could argue that there's perhaps a little bit of support here as well. It'd be interesting to see what happens next over the course of the next few hours. But of course, this is, I'm really liking this. I've been doing a bit of digging on this index. Cam sort of introduced me to this, so I'll let you talk through it, mate, in terms of what it's showing, what it's telling, what it's not telling.
Okay, I mean, I think we're all fairly familiar with the fear and greed. Maybe let's just run back a second, Mike, because let's just clarify what you said about the NASDAQ of down 6%. Let's just clarify for the guys that correction territory comes in at 10%. And correct me if I'm wrong.
Nope.
Correction territory is 10%. We turn into a bear market at 20%. So, you know, we're nowhere, well, we're near the correction levels, but we're just nowhere near anything that looks like a bear market. And even from my perspective, the MA200, which is the daily MA200, which is often, you know, viewed as some significant support, is about it would be a 14% drop. So even, you know, getting down to that level, we would still be, you know, holding the MA200 at 14%, not into any sort of bear market territory. Not to say that we couldn't go there, but certainly from where we're at the moment, and you're quite right, Mike, at the moment, that there seems to be a lot of support around those wicks that we can see there in the market.
2,400 is actually, that 2,400 is actually 10%, or maybe just over 10.7% or somewhere along that line. Doesn't measure it from its highs.
Yeah. So what's really interesting when we look at fear and greed, and you know, the guys that have been with us here and on my channel, and I often went on about, you know, when there's fear in the street, when there's blood in the street, you know, you want to be buying even if it's your own. And I do like watching that fear and greed indicator, as often we see the market pushing back up once we get into extreme fear. What's interesting for me this time, which I kind of alluded to, Mike, earlier with you, was I don't think I've ever seen, and it might be an interesting one for us to research or ask one of the AIs, is have we ever seen that we've been in extreme fear when the market's off 6%?
I know, that's a spectacular thing.
I can't remember anything like that. If we look back to Liberation Day, I think just off the top of my head, we were about 20% off. You know, the market was 20% off. In terms of the NASDAQ, it was 20% off. And we were into extreme fear, like 6%. As I say, it's not even into correction territory. So the fact that we're in this extreme fear is, yeah, it's interesting to me at the moment. The market's spooked. Is it on the back, or potentially it's on the back of the AI bubble? It seems like are we overreacting to the fact that, you know, there's not going to be a rate cut next month? Are we overreacting to the data as well? So I think it's yet to be seen, but it's not normal.
No, not at all. It's I mean, maybe part of it is uncertainty, because we don't really know what the economy is doing. There's a massive disparity, obviously, between what Trump says and what people feel like on Main Street, as we saw in the elections last week, and where he was punished a little bit, and with the absence of jobs data and things like that, we can make inferences from things like the ADP report, etc., etc. But it's really maybe some of that uncertainty is part of this too. But it does seem it doesn't make any sense theoretically, and B, it just seems like overkill. I must admit, after we talked today, I did a little more digging on. So obviously, it's a composite index made up of a few different things. So I've been doing some digging on that, and I reckon I could smash out an indicator, which you can subsequently look back and do the research on, so we can see what
That'd
it
be
was.
great.
During,
It'd be great.
it
I
doesn't
mean,
look that
if you
difficult in
do a
terms of
search on,
calculations.
yeah, if you do a search on the internet, you'll find some charts. You know, when crypto went into fear and greed with Bitcoin, you'll see that was near the low. It was very, very, very
Yeah,
near
yeah.
the low, which we do have a slide about as well, but bit later.
Yeah, well, it's a really it's a really interesting index. I mean, let's just briefly flick through some of the stuff that may or may not be contributing to that. Of course, we saw a Democrat split, and it's now reopened. I'm hearing that Thursday there may be tentative jobs data, non-farm payrolls, as well as weekly jobs released. But it is
I
tentative,
heard that. Yes.
which it'll
So
be
I
good to
guess
see where we're actually at.
yeah. And I think the interesting one with that, as we said earlier, Mike, is that if jobs are in the toilet, that's going to affect the Fed.
It's got to. It's
In
got
terms,
to.
yeah. So Thursday for us is pretty. We've got the minutes, Fed minutes coming out on Thursday, and potential data.
Wednesday night, isn't it? I can't remember if it's Wednesday or Thursday. Or Thursday morning our time.
Mm-hmm.
And then it was different. Look at FX on Forex. I didn't see. And then it's quite an interesting week from a data point. We've got lots of PMI data coming out on Friday as well, which is obviously a potential. It's the flash manufacturing data that comes out Friday, so that's going to be influential. Yeah, Wednesday night, our time, the Fed minutes, and then it's not too bad in Perth and in Bali, is it? Where we get it sort of at about 10:30 p.m. We get the non-farm payrolls and weekly jobs all on Thursday. It says here on Forex Factory. So yeah, that still looks as though it's locked in. But yeah, Friday's a manufacturing day today, which will be also interesting.
Yeah. Plus, we've got Nvidia earnings tomorrow, right?
Tomorrow night after the bell. So if you are in any NASDAQ futures contracts, just beware that there could be quite a shift in that once equity market shuts in that last hour of the futures trading. So just a little warning to those of you who are short-term futures trading on the NDX. But yeah, that'd be fascinating to see, because invariably they do switch it all apart, don't they? It's a general rule.
Yes. Yeah, and who knows? Would that settle some of the AI jitters that are in the market?
Absolutely.
Potentially.
Yeah, I mean, this affordability is fine. There are potentially inflationary pressures from obviously the health premium going to rocket for those on the Affordable Care Act. There's nothing more than the concept of a health plan to take it forward. And of course, we don't know what's going to happen to the Epstein files. It looks as though they're going to be released. I'm not sure whether there's going to be any market influence on that unless there's something dramatic in them. And I think
didn't Trump tell Congress to release them? I thought I read that.
He's intimating. Well, he said that before he was elected as well. But then there was a pullback on that. Some info came out that there's all sorts of conjecture about why they wouldn't be released. But essentially, half of I think 100 Republican members of Congress have said, no, we want them released because they're getting so much pressure from their local constituents and MAGA as a whole. So I think Trump's got to say, yes, I'll do it. Whether it's the whole or not the whole remains to be seen. And of course, part of the suspicion is that it's going to be. It's not. I don't think many people of sound mind suggest that Trump has been involved in anything criminal, but it's the implication of what else might or who else might be implicated in that, including Israel, senior members of the Israeli cabinet, as well as some past presidents, etc. So it's all very interesting.
Bill could be in trouble. Yeah.
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 So I think I'm not sure markets are going to, unless there's something massive. I'm not sure it's going to impact on markets, but it is good entertainment. And rightly so, those who have been involved in that travesty of humankind should be punished accordingly. But that's taken over from anything. That's taken over from anything of any reasonable, anything that might influence markets.
Yeah, I think if there was any influence, I think it would be short-lived. I think it would just be maybe a quick move, and then if there was a big dip, it's a kind of dip that could be bought back up quite quickly.
Yeah. So let's talk bubbles, shall we?
Yes.
So I've just put up some key points about what bubbles are, just in case. So essentially, it's where asset prices rise far beyond their fundamental value, where valuations are extreme, narrative takes over data, complete disconnect usually with any company production or output or revenue, and that is one of the major things that you're going to reference in a moment. Herd behavior accelerates the gains, and then prices ultimately become unstable, and then a small sentiment shift can result in a fairly big smash. So that's essentially a bubble, and of course, talk us through .com bubbles versus the AI boom. So how was it in 1999?
Sorry, you're asking me, Mike?
Yeah. So
okay.
So
I put this together earlier because there is this whole AI bubble going around, and then we had Michael Berry, I think it was 1.2 billion of puts against the tech stocks, which actually, interestingly, Michael Berry's closing his fund. You know this? He's closing his fund by the end of the year. Yes. He is closing his fund. He's written to his investors and said he's closing his fund because he thinks he's out of touch with current markets. So, he's gone and caused a load of problems because that's been part of the narrative that, Michael Berry, is short and thinks that tech is a bubble. He's going in and closing his fund. So, look, if we look back, we can see that, zero revenue, pets.com lost 147 million, shipping Chewy toys, cash flow, 90 times the firm's negative, with negative cash flow with no runway. The Fed was hiking rates at the time and closing down liquidity. So at the moment, whatever happens next month doesn't really matter. We are in a period where we are reducing rates, or we have been in a period of reducing rates with no sign of any rate increases. The only signs at the moment is, are they going to cut in December, or are they going to cut in January? So there's none of that. And not even rumored. I think the Fed have announced that they've already said that we're stopping quantitative tightening, and we're going to start quantitative easing as of the first. as of the 1st of December. So we are 12 days away from that at the moment. And okay, the dot-com bubble, yeah, we saw 78% smashed off the market. So where are we at the moment, Mike? We go to maybe the next slide.
There
So
we
the
go. Yeah, I
yeah,
heard that. I heard that QT kicks off December. QE starts probably January. Is what
okay.
I heard. But yeah, same story. It's
It's a month, right? It's a month here or there.
yeah,
So
absolutely. So stop QT
whether
and then start QE whenever. But maybe that's part of their interest rate. Maybe it is they're thinking that, well, look, if we start to put some QE in, maybe we don't have to be aggressive in terms of rate cuts. I don't know. But yes, anyway, much
true,
different now. It is
true,
different.
true. Yeah, I think it's different, and obviously I'm biased because these are and also maybe you're a bit biased, Mike, as well, in
Yeah.
terms of my AI stocks are Tesla and Nvidia, and from my perspective, you've got Tesla, real company making real profits with 42 billion on in cash and positive cash flow.
Yeah,
So
real products,
no,
real orders, all of that sort of stuff is there, and a
yeah.
plan that
Oh,
looks robust enough in terms of their technology going forward.
yeah, a plan that you would never see from any other company. I don't think we have seen a roadmap like this from any other company,
Yeah,
which sort of ties into Elon's compensation package, but it's another story. So Tesla, Nvidia, 28 billion in quarterly revenue. Fed, as I said, looking to cut rates. QE coming in. You could argue, yeah, maybe the S&P is overvalued, but there's no bankruptcies, and there's really, real demand, certainly for Tesla and for Nvidia is just insane with the amount of demand that those guys have got.
absolutely.
That these chip makers, they can physically not produce enough chips for the demand that's
Yeah,
out there. So much so that now, Elon's thinking of getting into the chip game himself, just so he can have enough chips for the roadmap, which they have.
possibly want a bit of that revenue pie as well, because it's certainly fairly lucrative if you do it. If there is that, like anything, if demand will always push prices up. But it's all based on real. It's all based on real. As a foundation, yes, there is obviously a degree of speculation, as there is with any stock, beyond book value. But the companies are real, the products are real, the revenues are real. So yeah,
And the PEs are low. I mean, okay, maybe Tesla's PE is pretty high, but I don't particularly like PE. But if you want to go down the PE route, Nvidia has a PE of 31.
extraordinary.
Largest company in the world, PE of 31. Costco, who I quite like actually, I quite like Costco. I quite like Costco stock. I'd like to buy it at some point, but that has a PE, I think, of 51, 50-ish. So you kind of got a membership, food discount retailer, premium discount retailer, and Nvidia tech company, AI company, 31. So to me, these are not ridiculous valuations. In
No,
fact, I'd go as far as saying Nvidia, I think, it's actually undervalued.
sure. And we'll find that out on Wednesday. Actually, no, Costco have done it. Costco have done their earnings, haven't they? Last week. It looks like. Oh no.
But
11th of December. Is that right? Yes. Yeah. Look, I think it's there's no reason to suspect. Yeah, it might be a little overbought until there's some more information come in, but I don't. This is nowhere near a bubble in terms of the theoretical definition of such.
I'm just seeing some of the comments. It's great. Yeah. Clinton is like Teflon. And Obama, yeah, spent time with Epstein as well. Yeah. Anyway, I'm sure, Mike, do you know Spitting Image? Did you ever used to
I
watch Spitting
do.
Image? Oh,
Absolutely.
and they're back and they're getting banned. So I'm sure this would be a great Spitting Image episode. We'll leave that comedy to them. But if you haven't caught up with
Yes.
Spitting Image on YouTube every week, fantastic. Probably the best 15
I'll have
minutes
to
of
have
the
a
week.
look.
And it's
I'll have to have a
it's a
look.
new series. It's absolutely on the money. Anyway, we
Yeah.
digress.
And I believe South Park has been rather controversial of late as well. If anybody, Trump and JD Vance have featured quite heavily. Plus, so yeah, I've seen a few people refer to that as being um, quite radical in terms of what it's. But yeah, look, it's great. It's great entertainment for her. I mean, obviously, we're interested in markets, and as Roger said, those that are accountable. Those who have done wrong should be accountable for their actions. It's really that simple. Anyway, let's get back to markets. The story will unfold as it unfolds. Cryptos. This is the fear and
Okay.
greed index on cryptos.
So yeah, so I mean we're really, really low. We've dropped down to 11, which I think we can sort of see with the price action. So, and this is also the bit of the disconnect I was talking to my guys earlier about as well, of that we've seen like a 6% move in the NASDAQ, and that's only sort of come into play this week, but we're sort of
Yes.
seeing almost a 30% move down in Bitcoin, which again is a bit of a disconnect for me. Crypto, certainly in terms of Bitcoin and Solana, has disconnected from the stock market, which normally there is a little bit of correlation between the NASDAQ and certainly Bitcoin and some of the major cryptos. But also what I was alluding to my guys was that, you know, this is not, well, the disconnect is a little bit unusual for me, but the move is not so unusual if we just look back, and we've got a little bit cut off there at the bottom for the time scale, so apologies about that. But this is really pretty much since 2024. We can see in this move up, you know, pretty much most of these retracements have been around about the 30% mark. So it's not been hugely unusual to see a 30% pullback within Bitcoin. Could we go a little bit further? For sure. But let's just see how it plays out. And at the moment, it's in fairly normal territory.
Yeah.
Oh, and then,
Sorry, go on.
sorry, Mike, just going back to fear and greed, because I found actually it came up on a couple of things that I was watching. This really quite interesting. And then maybe, Mike, when you do your back test, just to see, you know, what happens when we move into fear, extreme fear. But this basically tells us in terms of Bitcoin, of that when we move below 20 on the fear and greed index, this gives us 1 day, 2 days, 5 days, 1 week, 2 weeks, 1 month, 2 months. But we can see that within 1 day, we're normally up almost 1%, 2 days, almost 2%, 4% after 5 days, 1 week, 5%, 2 weeks, 9%, and 1 month, 19%. Now, again, let's see if history repeats. But yeah, this is very, very interesting. Look, again, keeping things into perspective. You know, previously, in our Christmas edition, we could be looking at Bitcoin up 20% from these levels.
Wayne Collins, can you just drop me a little Discord note to remind me to add that to my add a script to the indicator to actually test that out against various assets, because I think that's fascinating. Fascinating. Thanks, mate. So And then, of course, we can't be thorough unless we cover gold as well. So pop this in too.
Mm.
Obviously, we have a test that we had a test about 3 weeks ago. But again, context is all important. We've been 30% up since July, and a pullback from the highs of 10%. So I did actually think last week, I did actually suspect that this break might mean we retest around about that 43.50 level, but it never got there and pulled back along with Bitcoin and some of the other risk on assets. So obviously we've talked about Bitcoin as well, the NASDAQ pullback. So it just looks as though there's that little bit of a risk on maybe rotation into cash, maybe rotation into some of the, I think the Dow's only down about 2.5%. So maybe some of the Dow stocks have done okay as a result of some money coming off the table. But yeah, just for thoroughness. But again, we've got a key level there around about 3,920, which is what was tested 3 weeks ago at this stage, before we got this double bottom and shift up. So interesting times and potential opportunities as well, as Cam's already alluded to, in terms of the wherever the buyers come back in at, of course. Yes, I can. Heidi, I'll post it before the session is out. Any thoughts? I know gold isn't massively part of your thing, but any thoughts on that?
It's not. Okay, maybe it doesn't really give you guys some thoughts at the moment, but one thing at our little conference, my son was there, and he's very much a sentiment trader. And one thing that I've consistently been saying to him, like, oh look, gold's not part of my thing. But one thing I did consider was, yeah, sometimes some things should maybe become part of my thing just because of sentiment. That there's a gold, clearly we've had a huge gold sentiment, whether that continues now or not. But that big 30% run, I kind of said to myself, I'm not really answering your question, but just something for the guys, of sometimes you might just want to consider something because the sentiment's there, and and maybe trade it from a sentiment perspective. So yeah, it kind of coming back off the conference, it has been on my charts, and I don't know how I feel about it at the moment. I guess it's a bit mixed, isn't it? It's kind of, well, if we were seeing rates going lower or guaranteed to go lower, then we would expect gold to move up. There's a bit of uncertainty on rates, so we're seeing it going down.
QE should be bullish for gold as well, theoretically at least.
I think it should be just bullish all round. No, I mean, you
can't see many things that are going to push it down unless the US dollar takes them.
More liquidity into the markets, added to the fact that actually on my last week's update with the guys as well, did you see about, Mike, the stimulation checks that they're talking about doing in quarter one next year of $2,000 for
healthcare?
$2,000 for any family under $100,000 income.
Yeah, so
I thought was
bonkers.
Yeah, but again, stimulation checks. It should affect the market.
Yes, yeah.
And the other thing that came across my desk was that Trump, it's called the Trump account. Have you heard of the Trump account? Where he's going to give, or the government are going to give, $1,000 to every child that's born from January this year, 2025, to invest in US stocks.
No, I haven't heard that. That's a new one.
again,
Yeah,
another little bit. You got two stimulation checks. You got QE coming in. Yeah, will that float
it
gold?
is all money.
Yes, but I think it'll all float everything from stocks to crypto.
Yeah, yeah. I mean, the 2000 was a softener for the fact, or a softener in terms of healthcare premiums going up. Is what it was dressed up as. But you've got $2,000 and you're feeling quite healthy at the moment, I'm wondering whether how many people will keep it for that. But anyway, but yes, it's all money. It's all money back into the system. Of course, that's the thing we didn't mention was, of course, tariffs are going down because inflation is appearing just to creep up a smidge. Again, we haven't had any data to suggest that, but it was back up at 3% the last read.
But wasn't
But
sorry
they're
again.
called
Something just came. Sorry, Mike. A quick question for you. Something just it did come very fastly over the desk. Didn't we get some tariff exemption this week?
Yeah,
That
well, so
the
what essentially what's happened is that Trump has suggested in a Truth Social post. I don't know whether it's written in or written down anywhere, or whether it was just a middle of the night thought. But the idea is that tariffs will be reduced on agricultural products, so
okay.
beef and wheat and soybeans. Interestingly, since nobody wants to buy soybeans from the US anymore. And so yeah, so agricultural products only. So there was,
Okay.
so it might be worth looking at AAC for those of you investing in the ASX. They're probably the biggest beef exporter. So have a look at AAC. But
Interesting.
yes, so so it was on the agricultural side, because of course that's what the public are concerned about is there's no sign of food costs coming down at all. The only thing that seems to have come down a little bit is oil prices, and even that's not being reflected at the pumps to a large degree. So that's
And
a
eggs.
way to try and.
Don't forget the eggs, Mike. Eggs have
Sorry,
come
I
way down.
forgot the eggs. Bananas are the other one on the exemption list, on the
Yeah,
tariff exemption list,
eggs are
or
way down.
rather reduced. But eggs are doing well,
Yeah.
and oil's doing well. But yeah, all interesting stuff. But yeah, I mean, you're right. I mean, all that potentially is money into the system, and maybe it'd be interesting to see if the coffee, Chucky. How could I forget coffee? Absolutely, coffee's been a killer.
No.
So that's partly due to failed crops as well, I think. But yes, certainly combination of that and tariffs on coffee, but definitely coffee. Yeah, that's a good call. Probably the most important. Yeah, Paul. Can we not talk spiritual politics in the trade room? Paul, I think it's perfectly reasonable to reference it without making any. I mean, what we try to do if we're talking about anything like that is not be definitive, to sort of make sure that what we report is what the narrative is, and but we're interested in what happens to markets. There's no absolutely. I don't think Obama. I don't know Obama spent time with Epstein. I haven't heard that either. So I think that is, from a fact point of view, it's not true. I didn't say that, but certainly
It
somebody
was
said that in the comment. It was
was
Clinton.
yeah. It was in the
Um,
comments. But anyway, yeah. Let's definitely
yeah,
not
yeah. But
into
we're
any
not. We're not.
tinfoil hat stuff or anything. Definitely, we're here
Yeah.
to talk about markets. All
Um,
right, Mike. So what have we got next?
so
Uh-huh.
I'm got one to watch here, which is in the US. And I think this might be an un-Mike-like long-term play as well. So this is the rare earth strategic minerals ETF, which actually trades on MT5. And you can see, like most, it mirrors a lot of the rare earth stocks we talked about, or stock charts that we talked about before. We didn't put about YC last time. And you can see that pullback that occurred once China and the US started talking. But we're getting a little buying come back in again. So certainly through October, we had that pullback, and you can see that on any rare earth stock. But so REMX, and this is all-time highs here, around about 80 bucks. This is a level that I'm interested in, which I've cut off the price of just to be daft. Let me just see if I can bring it up on the main chart so you can see it all. There we go. Let me just, I didn't think I paused that, but let's just make sure that I didn't pause that. It's all gone port. Where are we at? Can you see the chart? Yes, you can see the chart. Good. So yeah, so around about that 74 looks really like a really interesting level. If we look back here, quite a lot of price consolidation around 74 there and there before this little spike upwards before we sold off. But I mean, I thought I'd try to think sort of cam-like with this, and so put together a little list of why I think it could be one to earn. So if you believe in the AI story, although they're not specifically, you don't need rare earths for chips. They're involved in just about rare earths and magnets are just about involved in everything else that's surrounding AI, so GPUs and fiber optic communications and semiconductor manufacturing equipment, renewable energy, if that picks its head above water, including EV systems, if you like your Tesla. So I think this, and the fundamental story on the stocks that it's holding within the ETF, is not one for the short term, although there is a potential short-term grab around about 6 or 7%. I think it could be one to just have a look at long term, but go and do your, the fact that it's tradable on MT5 is with Go is sort of encouraging. Of course you could just buy it with, if you've got access to the US markets. I think it's a good one to just keep an eye on. So with all ETFs, you've got to make sure that you go do your research in terms of what it holds to make sure. I remember, I don't know whether I've told this story before, but I remember some years ago, or many years ago now, I got some options in DBA, which is the agricultural ETF, thinking it would have lots of, wheat was doing really well at the time, thinking this is a good way to get into wheat. I'm not interested in trading futures. I wouldn't mind doing this. And then found that when I had a look at the holdings after I'd bought a chunk of calls, that they actually didn't hold wheat. They held cocoa and coffee. And so always, whenever I'm talking to ETFs, I always sort of suggest that people make sure you go and have a look at the holdings to make sure that they are actually holding what you think they might be. So go and do that as part of your research. But it could be one to just one that just sort of caught my eye and appears logical from a long-term point of view. And rare earths aren't going away; they're part of this growth story. So there you go. That's my thought for the day in terms of a chart to keep an eye on. Right. Just hopping through. I think we've sort of answered most of the questions and comments as we've sort of gone through, haven't we? Heidi,
I think we have.
I'll post the Discord link in chat, Heidi, so you can have a look at that. Gonna get a bit busy posting on there. Diane, I sort of feel that sometimes a correction isn't very nice, even if you have gone a long way up. It's always a little bit of feedback that is worth keeping in mind. Yeah, I think that's it. I think we've sort of answered most of the questions. I really appreciate, we really appreciate that any participation you guys give. It's always really positive that you do contribute. It's wonderful. So thank you very much for that. And so obviously to wrap things up, do you want to, if you've got the Telegram link handy, just pop it in there, can. Obviously, you can pop it into
Sure.
Discord channel. We'll try and be a little more active in that. There's a couple of things that I'm thinking of posting in that might be good.
Sure. One thing, Mike, just before you carry on, just one thing on the agenda today was the Tesla shareholder meeting.
Sorry, yes.
Well, no, it's fine. That's totally fine. What I did actually was I went over this. I can't remember, it was last week or the week before. They merge into each other. I went over pretty much all of the highlights of the Tesla shareholder meeting in one of my private sessions, but I cut that out for the guys and put it into my free channel. So what I'll do, if you're on my free channel, you'll be able to go and look at it there, but I'll post it into Discord so you can just have a look. I definitely watch it. As I said before, it's very rare for a company to have a very, very clear roadmap. And what I mean by that is that one of the major things that was voted in at the shareholder meeting was Elon's compensation package, which is in the press got a little bit blown out. He actually hasn't been paid for a very, very long time, but that's an aside. But the company have given him some targets to hit over the next 10 years, and I don't think Elon's never hit his targets. So I'll kind of go over that in the shareholder meeting, and maybe on another session we can extrapolate what that actually means if he hits those targets. But to give you the short of the long of that is, yeah, in my view, if he hits those targets, we're looking at a sort of a $2,500 stock price. But I will post that into Discord for you guys just to have a view of what actually happened with that, and yeah, what an amazing roadmap they've got over there.
That's sensational, mate. Thanks for offering to do that. It's really appreciated.
Sure.
And Gene, that might answer your question. What about his robots?
Yes.
It's that'd be wonderful to see. And look, if there's anything that you'd like us to cover, if there's anything that pops into your head or any thoughts you have, always open to them. And so please don't be shy doing that. We so appreciate you for being here. So appreciate for being part of it all. We'll do the next session. Keep your eyes and ears open for that. And in the meantime, trade safe. Thank you very much to everybody who's been part of this today. Paul, cheers. Gene, thanks. Michael, thanks. Chucky, you've sort of reminded me I had a coffee for 2 hours, so I'm going to have to do that. Wayne, always welcome, mate. You're always an asset to have around in whatever webinar we managed to get you on. Rob, I did see a question from you before, actually, and then you sort of looked as though you'd left. So I didn't get an... so I'm not sure where we answered. Let me just see if I can find it. How does the fear and greed index gets calculated? Well, you're going to learn that because you're part of the group that's going to help develop it, mate. So, but I think there's 7 metrics that it looks at, and then creates a composite of that. So that's how it's done.
I think, Mike, I'm going to have to start licensing my ideas to you, mate.
Well, look, no, you'll get it as well, mate.
There's VWAP, VWAP,
yeah, the VWAP might yet. So there's a VWAP indicator which comes reference into that may well turn into looking towards seeing if there's any way we can create an AI and stuff. But
interesting to hear the stats, yeah.
But yeah, from the point of view in the stats and having the one indicator which you can alter for time frame, and I'm guessing it's probably a commodities single asset index sort of gauge that wouldn't work on FX and stuff like that. I don't think, unless you were looking at US dollar index maybe. So it'd be quite easy to make it clickable if you can get the underlying calcs right to a number of assets. Anyway, watch this space on that.
Yeah,
Watch
be
this space
interesting
on
to
that.
know.
But yes, always listening is the key.
Awesome, mate.
Great stuff. Great stuff. Wait, look, you guys take
Cheers.
care, can we? As always, it's been wonderful just to share a bit of time and talk markets with you, mate. It's always
Cheers, Mike.
good fun.
Cheers, guys. We'll
All right.
see you. See you on the next one. Thanks.
Yep. Take care, guys. See you soon. Bye bye for now.